Hi, and welcome back to the Cheeky Crypto podcast. My name's Chris, and it's fantastic to have you back with us for another podcast video. And this one is another really important video, and I want people to watch this one right through till the end. I'm very eager to get everybody's views and opinions, so do let me know your thoughts and your opinions in the comments below. But why is this video so important? Well, we've had great success in navigating the crypto market so far through this bear market and, into these bear market rallies. And that is how I'm going to articulate them currently. We called the lowest low last May. Well, couple of Mays ago now, because we're in June, but just over a year ago, back in May, we called the bottom in June. That happened. We then went on to say that wasn't the lowest low, and to expect another lower low, and we got ridiculed and all that sort of stuff. And then in November we saw the latest lower low back in 2022, and towards the end of the year I said to expect bear market rallies. I think we've seen those, and I want to sort of delve into what my expectations are, and they're not good. I want to be really clear that I still expect a bare minimum expectation of at least retesting the lowest low, if not setting a new lower low. And I do think that once this final one is set, we are then off to the bull market, and I think that will also be a slow and steady move to from bear market to bull market. But I want to sort of articulate what I think could have the potential to cause what I'm expecting to happen, and sort of go through why I have these expectations where it could potentially be bullish for a little while longer before we start to see everything come to fruition. So let me know if you enjoy this sort of content. Like I say, let me know your thoughts and opinions in the comments below. Mash up that like button, subscribe if you haven't subscribed already, tapping that bell, selecting all the notifications so you never miss a video. Jump in our Discord. It's absolutely free to join Discord. Link is in the description of the video. Over 7,000 people supporting one another navigate the space safely. Loads going on, private sales, seed rounds, and much more. So check all that stuff out. And we've also got our Patreon membership. You can be kept up to date with all of our sales and all our buys and staking movements, all that wonderful stuff, and trading ideas and much more. Go check that out if that is of interest. So I wanted to talk about commercial real estate, and I know that I've touched on this in the past, but I think things are starting to really shift in the way that I thought it was going to over the last month or so. So I really want to just touch base on all of this stuff again, and sort of link it back and explain why I have the thoughts and opinions that I do, that we should expect a new lower low in the future. And I don't think this is going to be something that happens really fast. Obviously, for the last maybe year or so, I have been saying, well, it's probably not a year, it's probably 8-10 months, I have been saying that June was where I was expecting potentially for that new lower low. Timing is the hardest part of all of this, and the Fed did something that I didn't expect them to do. They went with a 0.25 when I thought they were going to go for a 0.5, so that may have lagged my prediction a little bit. And we'll see how that actually happens, right? And where we sort of land from here. But what we're seeing is lots of commercial real estate being sold at really low prices. Clearly, lots of investment firms, companies that own this real estate are looking to shift it on. And the reason why they're looking to do this is because they can't afford to remortgage. There's a number of remortgages that are going to be happening, and they've probably had an interest rate of 0.5, and that's likely to go to 5 with what we've seen with interest rates. So there is a real concern here bubbling, and I think that we're likely to see this really start to get some headlines shortly. We've got billionaire investor Howard Marks sounds the alarm on commercial real estate, warning the wave of mortgage defaults are coming. And this is what I'm talking about, right? When we see these big companies start to sell off this commercial property really, really cheap, it's because they want to get it off their books. They need to raise capital to keep real estate that is gonna be profitable or salvageable in this downturn of this market, right? And I'm going to get into what a lot of this means in a moment. But they can't afford to remortgage some of these properties. And what I would say is if we take the US, for example, about 50% is being occupied of this commercial real estate with everything that's happened after the pandemic, and people working from home and all that stuff, right? I want to say wonderful stuff, but it isn't really wonderful. Obviously, I'm not the only one with these opinions. Elon Musk warns house prices are set to plunge and says commercial real estate is in meltdown. And, this is the stuff that I've been talking about for some time. Brace for intense pressure on commercial real estate to spread to the housing market, says Elon Musk. Commercial real estate is in meltdown and it's melting down fast. Home values next, the tech billionaire tweeted. Investors are worried about real estate in a period of high interest rates and tighter lending. And we need to be aware of this. We've had Canary Wharf debt downgraded is a sign of wider property woes. Owner of East London Financial District has debt coming due. Investors cautious on real estate, leading to large discounts. And it's not leading to large discounts because people are worried about it. It's because a lot of these companies don't have liquid cash to be able to maintain these properties, right? They're 50% occupied, and you can't survive like that. And we're starting to see these properties being sold at a reduced price, which is one of the first signs, in my opinion. More Canadian cities are turning office towers into homes to save their downtown cores. And again, this is something that we've seen in the UK. We've started to see student accommodation, offices being converted into student accommodation is something very prominent that I've noticed here in the UK. And again, turning them into apartment complexes and stuff like that. We're seeing this more and more in the UK as well. It's not just Canada. I think this is a huge issue, and one of the ways that they're looking to solve it is through city homes or city sky-rise apartment complexes and stuff like that. And this is where I think Elon Musk is right. We're seeing this pivot from offices being turned into properties where families can live and stuff like that. So I do think that is going to have an impact on the price of the everyday person's home, because ultimately there's going to be more homes on the market, less demand. The demand doesn't change, but the number of properties available for purchase does, and again that has an impact on price. So I do think that we're going to see this impact the everyday person as well. Banks' exposure to commercial real estate is red flagged, I should say, by analysts. And again, this is European banks' exposure to commercial real estate has come under renewed scrutiny amid a wider worries around the sector and weakness in US office due to refinancing challenges and all that sort of stuff. So what I want to say is there's real big problems, and I think, and I've said this a few times, and I probably haven't explained it very well. My expectation is for more bank failures. I think this is a given, something that's definitely going to happen, and I think a lot of it's going to be tied to commercial real estate. We've already seen some of the biggest real estate owners in pockets of the US defaulting on property loans. And the banks are going to, basically struggle to sell these on, and are going to be, seeing heavy discounts. I think we've already seen a 15% decline in price for commercial real estate in the last couple of months. I think this is heading to, somewhere in the region of 40 to 50% discount. And, I think that the crash is going to be almighty. And, we're going to see lots of banks failing right now. I wanted to sort of cover what the size of the market actually is. we've got $34 trillion worth of global commercial real estate, and this is broken down into different sectors. Not all of this is going to be impacted potentially by what we're talking about, but maybe it is. We've got North America. We've got North America 2022 was worth 11.34 trillion. I think that this is going to be a huge issue. We go office was 28% of that, residential not so much impact there just yet, but that will be a lagging one. Industrial, potentially people still need to go there, so maybe that won't be as impacted. Retail, so your shopping centers and stuff like that. Lots of shops went out of business because of the pandemic. And then we've got other hotels, mixed use and alternative. So, I'm saying that a large percentage of that $34 trillion worth of, real estate is going to be impacted here. That's kind of my thoughts and opinions on it. We actually have a look at, 2008, which is what I think is going to be classed in the future as a smaller event compared to what we're going into. Just want to sort of give people an idea of expectations here. We saw this big drop in stocks. Now, I do think that stocks are correlated with cryptocurrency, and I do think that we're going to see this in the crypto space as well. This is a chart here that really does demonstrate it quite well for me, in the respect that I think we're going through this upward trend here. And then we're going to start to see more and more banks fail, and then job losses, and then nation in recession. And we're already seeing some countries come out and say that we're in recession again, like Germany, for example. So I think we're going to expect more of this. And maybe I'm poorly articulating this, but I think that this is going to be what potentially crashes the crypto market along with stocks and other financial instruments. Let me know your thoughts and your opinions in the comments below. If you enjoyed today's video, mash up the like button, subscribe if you haven't subscribed already, tapping that bell, selecting all the notifications so you never miss a video, and I will catch you in the next one. Take care.